Welcome to TradeTheMBI.com. This is John. This report is for the 17th, and well, finally got a little bit. I mean, look, when you look at this chart, it doesn't even show up as much. It's just like a blip of in between, and we can see that there was some softness starting to come a little bit as the steel crossed just below. But you can see this heading straight to the bottom. I mean, complete short-term buyer fade out, and yet not hardly a drop of movement. Now, the fact that we do see the orange moving to 13.5, we could now see a little bit more of an extreme of that. Had it happen a little bit briefer right over here. First pops up, usually get a little bit of decay in that, so it's going to depend. The steel will have to rebound pretty significantly in order for that. We've had some positive extremes from this, and we've talked about that before. So pull back even through some of these, 30, 40 points would not be significant. It just would be a normal retracing. We've met that standard I was talking about in my little mini rant prior to, Trump having his news conference about the run for this was, somewhere right between that 60 and 90 points. We did right at the bottom side of it, and to see some softness within it. Not out of reason. Also, plus 29 on a shakeout for NQ, meaning there's got to be some softening, just a little bit. The rally in the euro actually is enough to spare it. It's amazing. Every time the central banks get in there, it's just enough to keep it going. It's all it takes, just to keep it right in that range. Bonds holding on just fine. A lot of that's going to be until some of the speculation. You're going to actually have to see the economic numbers change as opposed to just talking about them. Oil, it's not even worth mentioning really, because it's just going to be stuck in that malaise until something actually breaks free and gold again. I expect that to start to break out to new highs, because while everyone else is waiting, you can't wait when it comes to the commodity. You're going to start picking it up early, because it takes a little bit longer to build up your general positions with it. And then here we go for the 5K. So we had a nice little build up at the end of the day. Really almost got back to flat with it, right about there. And once that faded off a little bit here at the pre-market, we ended up with a nice little fade out. We are oversold, even dip below the red line here, so we still have a chance to hit that target, the full range on it, before it starts to give a buyback. So this is a much shorter report than the broader economic one that we talked about in a bigger scale. And unfortunately, every time Trump opened his mouth about taxes and or Obamacare, the date just gets further and further away. Before it was going to be a couple of weeks. That was a few weeks ago. Now it's moving into the beginning of March. So another 15 days. And I think that that's starting to create a few more jitters into the market that, all right, this is just going to become a postpone. Pretty soon you're going to get to we're no longer going to have the wait and see. We're just going to start selling because we're not really getting real indications. And we already talked about that. There's a lot of excitement, but until you actually produce something, it just becomes BS. So that is the basics of things right now. Going into this weekend, we should maybe get a little bit more of this selling to go back in there, but I don't see it yet being too much. There's not really yet a lack of confidence, just this constant delay thing tends to be a little bit of a problem. So we'll have to see where that plays out. As always though, trade well. We'll talk again later.